The major driver is geopolitics. We're going to a deglobalized world where we're using more and more gold as backing. The BRICS are using gold as backing for the payment system. The saving rate in gold is accelerating everywhere. In Asia, it's already been high. And because if you look even the Japanese, they are actually selling US treasuries because they have to bring the money back home. And the ladies who were saving in US dollars, which paid them 2%, they can get now in the long end in Japan 4%. So you have pressure on the US dollar, you have pressure on the financial system, you have counterparty risk which gets eliminated. And you have a move from financial assets into commodities and precious metals. And today we are at about 0.4% exposure in the gold side, and then peak valuation in the cycle we are about at 4.5%. So we have a long way to go in accumulation.
So for somebody that's watching our discussion right here and hearing your forecast, they don't own gold right now. Does it make sense to get in now? And if so, would you be buying a bullion? Would you be buying miners? Would you be buying ETFs? How do you play this?
Look, I think everybody should start with having a certain amount in physical, real physical, so not in ETF, not a paper contract, physical gold, which to hold. And then I think the other thing which looks attractive are the miners. They are trading at 0.4, 0.5 price to book. It's one of the cheapest I've ever seen, so they have really a long way to go where the margins in this business are exploding. And so I think from an ownership point of view in the mining universe, it's a record low. So there's a long way to go on that. So I'm looking there at probably one of the biggest returns. And then the byproduct or a second PMG is silver. You have a silver war basically brewing with China restricting exports and with Mexico being certainly under pressure right now because of violence in the mining universe. So you should actually see output and free available silver to be restricted. And I think that's probably another great way to play something which has been lagging gold for a long time to explode higher.
I want to get your take on safe havens. How does gold compare to the likes of developed government bonds, of course, U.S. Treasuries, JGBs, bunds, as well as reserve currencies, the U.S. dollar, the Swiss franc, or even the Japanese yen?
I think it's going to be gold, which is going to be the reserve currency asset. We're going to basically monetize gold to come back in the financial system. And everybody is going to reduce the third-party risk exposure. The third-party risk exposure means unlimited amount of printing and devaluing paper is not attractive for a central bank to preserve stability, particularly not in an inflationary environment. So the only way to do that is by adding precious metal to the portfolios. That's true for central banks, and it's true for private investor, institutional managers, wealth managers. And so I think that's going to drive the new cycle higher, including on the end moving into commodities, oil, energy, base metals. And I think you've seen this trend already having started.